Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The dollar is concerned about the Supreme Court's verdict. Stock indices are wary of the rally. Gold is being sold on the rise, and Bitcoin is evoking fears of a crypto winter. Strong macro statistics, rising treasury yields, and a drop to a 62% chance of a rate cut in December did not help the dollar. Encouraged by the possibility of the Supreme Court overturning tariffs, the U.S. currency's competitors are recovering. At the same time, the pullback in U.S. stock indices allows parallels to be drawn with events 25 years ago. Following the collapse of the U.S. stock market during the dot-com crisis, the dollar declined for 8 years, from 2001 to 2008. It lost about 40% due to the diversification of investment portfolios in favor of foreign securities. The shares of modern technology giants are significantly overvalued. Companies are investing huge amounts of money in artificial intelligence. If the investments don't pay off, the bubble risks bursting. Capital outflows will deal a blow to the U.S. currency. The Supreme Court doubts that Congress will simply hand over to the White House its constitutional powers to increase budget revenues through taxes. And tariffs are taxes. In this scenario, America will have to return the money, and the budget gap and payment deficit will grow. This is already putting speculative pressure on the exchange rate. After reaching a 36th record high at the end of October, the S&P 500 took a few steps back, cooling off after overheating. The spread between the broad stock index and the 200-period moving average is 13%. In the past, such an extreme difference did not last long and ultimately led to a pullback. Since April, the market has not fallen below the 50-day moving average and has not declined by more than 3%. The third quarter corporate reporting season is coming to an end. The Magnificent Seven are set to report 27% profit growth. This is twice as strong as forecasts, but it is already factored into prices. The broad stock index needs a new driver to continue its rally. Without new positive impulses, investors are focusing more attention on previously ignored negatives. The colossal costs of technology giants may not pay off, and the Fed may surprise investors with a slow rate cut. Investors are increasingly drawing parallels with the dot-com bubble that burst in 2000. As is the case now, back then, the fundamental valuations of the S&P 500 were also overestimated. The broad stock index is trading at 23 times its expected earnings over the next 12 months. The average value of the indicator is 20. Shiller's price-to-earnings ratio has reached 40 for the second time in history. In such conditions, the probability of a correction in the U.S. stock market is very high. After falling 10% from record highs, gold is trying to find its footing. This is being helped by the Supreme Court, which is considering the legality of U.S. tariffs. If Donald Trump loses, the money will have to be returned. This will increase the budget deficit and public debt, and cause chaos in the financial markets. Fears about this are forcing investors to hide in safe haven assets. However, the playing of old trump cards does not allow us to expect a serious rally in gold. According to estimates by the World Gold Council, central bank purchases of bullion in 2025 are expected to amount to between 750 and 900 tons. In each of the previous 3 years, the figure exceeded 1,000 tons. China's cancellation of VAT credits for precious metal retailers will increase prices for the jewelry industry and lead to a decline in demand. Meanwhile, ETF stocks are falling. HSBC, Bank of America, and Societe Generale continue to stick to their forecasts of $5,000 per ounce. However, the gold bubble appears to have burst, and selling on the rise is becoming a relevant trend. Crypto winter is returning to the digital asset market. Bitcoin's 20% drop from its record high was a red flag for whales. According to estimates by 10x Research, long-term Bitcoin holders sold approximately 400,000 coins, worth $45 billion, at the turn of October and November. Sales could reach 1 million, as in previous bear markets. As a result, the first cryptocurrency then risks falling to 85,000. Investors are actively buying derivatives with strikes at 80,000. K33 Research notes that the break-even point for ETFs is just above 89,600. A fall below this level could lead to a severe outflow of capital and a collapse in prices. It will be interesting to see how corporations that have been accumulating crypto will behave. According to Cantor Fitzgerald, for Michael Saylor's strategy to reach the $20 billion profit announced in the fourth quarter, Bitcoin must be worth $150,000. Cryptocurrency is facing a decline in confidence and is sensitive to sell-offs of tech giants' shares. Supreme Court hearings on the legality of Donald Trump's tariffs, rumors of an end to the shutdown, and expectations of macroeconomic statistics for the United States will be the focus of investors' attention in the second week of November. The economic calendar includes releases of data on U.S. inflation and retail sales. However, due to the government shutdown, the likelihood of their publication is low. Markets will need to continue monitoring alternative indicators, like weekly private sector employment data from ADP. Outside the U.S., pay attention to the U.K., Japan, and eurozone GDP data for the third quarter, as well as the job markets in the UK and Australia. Political turmoil and cooling economies are negatively affecting their currencies. However, if the data brings a pleasant surprise, the pound, yen, and euro may improve their position. Follow the updates on global markets in Pro News Weekly. Like, share, and subscribe.